Everybody, I hope everybody's having a great day today. Now in today's video, today's live stream, we are going to be talking about swing trading. We're going to be talking about how to find some stocks. We're going to be talking about some possible swing trades we're in, a whole bunch of fantastic things. So I hope you guys all enjoy it. If you guys have any questions, by all means, ask in the chat room. We got the chat room up, ready to rock and roll. So guys, I hope you guys all enjoy this, and very, very exciting news. You guys can use code GIVE to get $50 off the course. Now, with the course, we have private live streams, quizzes, lectures, group chats. It's absolutely fantastic. I put it in the chat room, code GIVE, and the great thing about this code is when you use it, you will be entered in for a giveaway. With this giveaway, you guys will have, you guys can pick anything from pretty much my merch site. You guys can pick hats, desk mats. It's awesome. So check the course out. It's absolutely fantastic, and very, very exciting news with the course members that are already in. The great thing about it is I am now going to be doing a pretty much swing trader of the week, where the person that is dedicated, that is ready to rock and roll, almost every single day, they're going to be the swing trader of the week. What you get is a free merch, very similar to the other one. But guys, and the winner of this week's swing trading, pretty much the swing trading master of this week is going to be Jim. I think it's Guntner. If I'm saying it wrong, I apologize. But DM me on Discord, and we can hook you up with some great merch. You're always awesome introducing everyone that joins the team. So I appreciate you. He's a great member and a friend. So, all right. Now that we got that out of the way, now let's kind of dive into some of the swing trades. So for me, so with the private live streams, the private ones are going to be Monday. Monday is the private one, Kathy. Monday, I'm actually thinking of going Monday and Friday, and then on Thursday we do the public ones. So Monday and Friday is what I'm thinking. Right now it's just Monday, so let me know if you guys want me to do Fridays as well. But yeah, that's kind of where we're at. Yeah, all right. Let's kind of jump into this. So what do we look for? What do we look for swing trading? So swing trading, for me, stocks on an upward trend, sold off down to some level of support is very, very, very important. Now, the reason I always choose stocks on an upward trend, one, more buying pressure involved. Often you'll see stocks that are moving up like this. HC here has this great upward trend, sold off down to a level of support here on that 90-day moving average line. It's kind of been just consolidating here. We did get a break below it. And the thing is during this break, a lot of people think that with these moving average lines, it's dead on it, right? Yes, we do see a lot of tendencies where it's dead on it, but looking at like these 200-day moving average lines, you guys can see that it hits it and it dipped below it a little bit, right? You guys can see, but still it uses those moving average lines as support. So how can you implement it where you don't get stopped out? So for me, at least, I think it's looking at a couple of things. I think it's looking at like the RSI lines, as well as like the hourly chart. The hourly chart, or even if we go to like the minute chart or whatever it may be, what you need to look for is a possible confirmation. All right, Jeff, how do you determine position size for a trade? Is the answer different if it's a $5,000 account versus a $50,000 account? So, I mean, for me at least, I'm never going to be dumping a bunch of money into, one trade, and what I mean by this is if you have $5,000 in an account, maybe growing an account, you kind of have to be a little more on the aggressive side, right? Because you need to build that up to 50,000. So for me, at least, which I've been doing it for a while now, I'm willing to take on more risk with a smaller account and go heavier in with a smaller account compared to, if I have $20,000-$30,000 in a trade, and that just say it goes up 2% on 20,000-30,000 is a decent chunk of change. So I'm willing to go a little heavier, go more all in, I guess, with a $5,000 account compared to a $50,000 account, if that makes sense. But yeah, that's kind of what I do. But yeah, position sizing, I mean, like you just have to, a good rule of thumb is like 2%. So never risk, more than 2% of your total account balance is a good way to put it though too. So, but yeah, it all comes down to you and how you're willing to grow an account, I guess is the best way to put it. But looking at HC here, you guys can kind of see, let's kind of get back on track here. You guys can see it dips below that moving average line, right? It hits it and it's kind of curling its way up. Now, as we go to like the hourly chart, let's kind of peek at it here and see what we had. So we had this great breakout here, which honestly was a pretty good trade at $58. It slowly was moving its way up a little bit, and then we did get a little dip below it. Looks like they did release a dividend here. So for me to answer that question, this is just one of those trades really where everything looked right. It had all the right parameters. It just got some sell-off, which just does happen. Does this mean we're out on this position? Well, if you hopped in right here, let's just say at like right at that moving average line at about 56. Let's see here. So you hopped in at 56. That just say your target was breaking out above, that just say above this resistance, or even up here. We can say about 40 or 64 here. So that's about a 15% return roughly. Now, if you move your stop loss down here, your still risk and reward is relatively decent, right at 3.4% or 3.4. So you're risking $1 to make $4. This is why this tool is so important, and I absolutely love Moomoo is because of this. But you guys can, even if you have it all the way down here at that 200-day moving average line, it's still a 1.2. So you're risking $1 to make $1.26. If we get that move up. But for me, you just gotta have those stop losses kind of just below the lowest wick here, even though we did get that dip out. It's just one of those trades where it just does happen here. Another one we're looking at here is ticker symbol BRRM. So like I said, stock on an upward trend that have sold off down to some level of support here. Looking at the RSI, it's trading at a 36, which means we could see a little bit more sell-off here. And the reason why I say that is because looking at like these RSI lines here, right now it's at a 36. So the last time it was at a 36 was right in here, and we still got that dip below like a 30, or even in here it was at like a 34. So we could see a little bit more sell-off with this. But what am I doing beforehand? So honestly, what I do is I draw my tools up, boom. My target is going to be near around 22 to about 23. So let's go ahead and draw that out. I'm so used to using like, so like up here. So that's about a 7% return. Our stop is going to be pretty much below, I would say below about 21 even. So we're risking, about $1 to make $3.41. So stock on an upward trend, right? Sold off down to some support, very similar to like what we saw in here, or even here, where even it consolidated for a minute. We could see that as well. You guys can see it consolidated for several days before we got that nice move up. So we could see a little bit of some consolidation and a slow move up. If it dips below 21, we're out. This one here, we're already up on it, so it's not that big of a deal. But let's move on to the next one here. BBIO here, BBIO. We've traded this one, textbook trades in the past. Good trade here. Hit it on that 90, moved up to resistance. Welcome, Jim. This is one of my favorite traders in the Discord group, Jim. And Jim, if you are just joining, you were the swing trader of this week. I did it before. What you're gonna do is message me on Discord, and I'm gonna send you some merch. this week. So DM me and send me your info. And yeah, very excited about this. Every week, we're going to be doing giveaways and stuff for our team members and people that are joining. So everybody's getting stuff. So, but BBIO, you guys can see, we're still on this nice move up, which is good to see. Looking at, let's go to like the 1 hour chart so we can kind of see what happened here. So, we got that good move breaking out, kind of consolidated here, a little dip below, which really isn't that big of a deal. Hopefully we can get this nice move back up to levels at about 39. Right now it's at about 34. So let's go ahead and draw out our tool. So right now we're in near and around 33.85. Near and around 33.35. So let's go ahead. Why isn't that working? There we go. All right. So if we can get a push up to 39, right now we're in right near and around. Jeez, this is like sticking weird. Near and around 30. It's a little bit below, but so we're risking about $1 to make $3. Anything like a 3-to-1 is a pretty solid risk and reward. Really. Yes, we did get a little bit of some sell-off here today, down 1% today, but in the grand scheme of things, a lot of people ask, they say, Carter, when you're in a position, do you get nervous about selling when you're up or whatever it may be? So there's pretty much 2 rules. 1, never trade with emotion. Emotions is a recipe for disaster. And 2, I've never lost money taking profit. And what this means is if you're in on it and you just get nervous, maybe you don't like how it's selling off or how it opened one day, just sell out. If you're up, take your profit. Take your profit, go back to the studio, go back to paper trading and see what's going on. Hop in on it and just watch it. There's nothing wrong with not trading, sitting on the sidelines, especially if you're already taking profit. If you're already taking profit, you're way better than 90% of traders. Most traders lose money. So being in that 10% that are successful, take your profit. There's nothing wrong with taking a small profit at 1 or 2%. The 1 or 2% compounded is an excellent return over the course of the year. So there's nothing wrong with that. But another one we're in on here is BLND. Great trade here. You guys can see hopped in near and around 223. Right now it's trading. Hopefully we're going to break out of 250. I think we're up a little bit today, which is a good little move here. But yeah, something like this, pretty solid. Hopefully we're going to push up to, it would be great if we could get a push up to 3. But I really think there's a decent amount of support right here at 272. You guys can see it hits it a couple of times. We're just getting some sell-off at that resistance. So, it's not that big of a deal. But what do we notice about all these stocks? Stocks on an upward trend, sold off down to some level of support, undervalued on the RSI when we hopped in. Last time it was there, it was all the way back. Right in here where we still got that good move, still got, a variety of good moves here. But yeah, another one is Shop. Shop here is one of these stocks where it's kind of just consolidating right along this 90-day moving average line. What does this mean? How can you prepare, for sell-off? You just got to stay in it. You understand there's resistance. It sold off down to an earnings. We kind of missed this move where it went from 77 to 84. And the only reason why I didn't hop in on this is it really wasn't undervalued on the RSI. It was just after an earnings, which isn't that big of a deal, honestly. And so now it's just kind of going flat along here. So in a dream situation, we could see this slowly start stair-stepping its way up like this. So it may take a little longer here. And if it just starts dipping down to where we don't like, I think I'm already up on this one. I think I got a very good fill on this price. So I'm pretty sure we got in near and around this 34.50 mark. So we're still up, but yeah, so it's just one of those things where it's just going to consolidate. It's not that big of a deal. Palo Alto is another play, hit that 200-day moving average line. I was hoping we could get this fill where it kind of fills this gap here. It's called a gap fill. Great trade from the 200 all the way up to the 90, broke out of the 90. Now it's going to start using it and riding it as support here, which is a good little move. But yeah, great trade. Nothing wrong with, an over 13% return, risking $1 to make $2.79. Setting our stops just below here. So, nothing wrong with that. This is a fantastic trade here. But yeah, let's continue here. AAOI here, this stock got absolutely annihilated. And what do we notice? After earnings, what do we have a tendency to see? Let's go ahead and look at Shop. Okay, it announced earnings, got crushed, right? And then we had these couple of good days of just straight buying pressure. Let's go back to Palo Alto, or I think am I even saying that right? Yeah, something like that. Released earnings, got absolutely annihilated, started moving its way up. AAOI, released earnings, got crushed, started moving its way up. So what do we have a tendency to see is any action in the market is often an overreaction. I'm not saying to trade during earnings because these massive moves can blow up an account, but for me, there's nothing wrong with taking a trade after an earnings, especially if it's on a support line. What do we have a tendency of hearing? Buy low, sell high. So that's what a lot of traders do, a lot of hedge funds do. So when something sells off like this, boom, and gets crushed, you hop in, try to get near and around that 200-day moving average line as close as you can. Now it's moving its way up to break out of the 90-day moving average line. I was drawing a blank. And I understand we had this day where it got crushed, and most smart traders probably had their stop loss. And that's completely okay, especially if you already got a great fill, right? It's undervalued on the RSI. But the issue, what some traders do is they get nervous. So let's look at like this. Let's kind of zoom out here. So this is on the 1 minute chart. So you guys can see it gets absolutely annihilated. Finds some decent support. You guys can even see pre-market here. It hit all the way at lows at 1156 and slowly started stair-stepping its way up. You guys can see boom and just kind of started moving. As we look at the hourly chart, let's go back, zoom in here. This thing gets absolutely annihilated, boom, and starts stair-stepping its way up. The issue that I see a lot of traders do and face here is they hop in a little too late. And what I mean by a little too late is they hop in near and around, $14 or $15, which I understand you're kind of in this middle ground. And let's draw it out so you guys can kind of see what I'm saying. So you hop in, let's just say at $14.80, right? So now your stop loss, or your next pretty much your next support's going to be that 200-day moving average line. Okay, your next profit or resistance is going to be here at that 90-day moving average line. And yes, it could break out, and we hope it does fill, but you have to be realistic, right? So your risk and reward ratio is very low at 0.78, meaning you're risking about $1 to possibly make 78 cents, which isn't that good of a risk and reward compared to if you got a very good fill, at 13, which some traders did. I know, especially in the group, we had somebody get one at 13. I think mine was 13, 20 in the 1320s, but still now your risk and reward is $3.83. So if you see it, use this tool with Mumu and say, all right, it's under 1. Let's not take the trade, or let's just watch what happens. Like I said, getting back on track of, the train kind of already left the station. So you never want to be on that train, because what happened? It popped off, sold off. Now you're freaking out saying, oh my God, this thing just sold off. It's going to zero. But realistically, you just got a bad fill. So, all right, another one is NVS here. This one here we are out on, but this one here is a decent trade. Old resistance, you guys can see, hits it several times, has a tendency of acting as new support, and that's just exactly what we saw. We kind of got lucky, to be honest, because it gapped above that 90-day moving average line. Now it's curling back, and we could get a little move on it, but we already took our profit. It wasn't much. It was only like 90 cents to like 103, I think, is when we got out on. So 2%. But guys, base hits over home runs all day long, and it'll be way better off. All right, now let's kind of talk about some stocks with some opportunity here. Is we kind of already mentioned HCC here earlier in the stream, but let's talk about Apple. Apple, right on that 200-day moving average line, it got bought up here. We could see a small move from 80 to like 85 to 90. So let's draw out our tool. So if we hopped in now, boom, boom, hopped in now. Stop loss, I would probably set my stop below like these wicks right here. So you could have your stop loss be very tight at like 178. So you're risking, let's go ahead and go like that, because your next resistance is going to be that 90-day right there. So you're risking $1 to make $3.11. And it's Apple, so it has that nice upward trend, which we like. It has decent amount of support on these moving average lines. A lot of traders, a lot of hedge funds buy them on here. So we understand there's going to be a decent amount of buying pressure there. But yeah, AAPL, good move here. Another one is NXE. Could see this move. It's one of these things where it's already kind of left the station, so NXE, see if we could get some more moves on the 90-day. DNN, similar situations, kind of breaking down below it. UEC, breaking down below it. We're hoping to get some consolidation here. We know there is going to be some support start stepping in near and around this 609 mark. You guys can see it just loves that support, which is that old resistance. So actually, what we're going to do is just pop an alert here. Nothing wrong with setting an alert. Let's just go, I think it was, yeah, we can go 612. Let's just do only once, price below. Now what this does is if we get some sell off here and we get notified, we hop in here, boom. We understand it has that support. And I understand, right, we could see some sell-off back to that 200-day moving average line, 100%. But I would just set my stop loss very, very tight with this one. And so if it just does dip down a little bit, or even if it goes to that 200-day moving average line, it's still you're risking $1 to make $1.14. Isn't the greatest, so I'd probably just adjust my stop with this one. So it's like a 4 to 1 risk and reward. But CNX here, just kind of bouncing along that 90-day. Could see a nice move. Right now we are on this this kind of little bit, whoa, wrong tool. Kind of right along this downward trend here. So we could see a move actually from 10.46 to like this $11 mark. It's one of those things, train kind of already left the station. I wanted to throw it on watch just to see what happens with this one. FMX here, this is in the wrong category. This should be in holding, but good move on that 200, moving our way up to that 90. That's why I absolutely love these moving average lines, right? You understand it hits it once, twice, now it's moving its way up all day long. EU, this is another stock we've traded in the past. We had a good move, and it's just on this general downward trend. So where would I want to try to buy it? Right, if you want to do price support, let's go ahead and draw that out. So price support for me is going to be near and around this 350 mark. So let's just set an alert there, and we can get notified if it does sell off. Boom, boom. And this just kind of breaking down through those support through that 90-day. Obviously the 200 is going to be stronger. The 90 is only as good as it's only as good as, it's hard to explain. Like the 200 is always going to be stronger than the 90. So You know, obviously, if we can get a trade on the 200, I'd rather take that all day. But yeah, let's move on to this one here. Kind of similar situation, breaking down. KGC, another one we're just kind of breaking down. We're hopefully getting some buying pressure. You know, it's not doing super good, but does have some decent amount of support here at about 448. So we can just set an alert here. But yeah, so these are a lot of the stocks we're looking at, guys. You know, I hope you guys all enjoyed it. I'll go ahead and I'll make sure I send all of these over in the chat room for all of you guys that are in the group. But guys, don't forget to use code GIVE to get $50 off with the course. And yeah, I think the plan is for all of you course members, we're going to be going live. I believe it's up to you guys. You got to let me know. Monday and Friday, start of the week, end of the week, and see how we finish. That's kind of what I'm thinking. And then the public one with all of you guys on Thursdays every week at 1. We just got to figure out the times. I know some of you guys like when I go earlier. Some of you like when I go later. So just let me know. It doesn't matter for me. But guys, I hope you guys all enjoyed this video. If you guys did, what means the world to me is when you actually like and subscribe if you guys are new, because then more people can see it, and you know, it's just better for everyone. So like right now, subscribe. Don't forget to check out the course, and I hope you guys have a fantastic weekend, and we will see you guys later in the next one, guys. Take care.